Hello and welcome to the 720 Credit Score Challenge. Our mission is to provide you with a set of simple steps that allow you to dramatically improve your credit score quickly, stop being treated unfairly by banks and credit card companies, and start keeping more of your hard-earned money. Today's lesson is for people who need strategies for increasing their credit score quickly. For instance, let's say you want to buy a house or a car, refinance an existing loan, or renegotiate your credit card interest rates. The higher your credit score, the better your chances of achieving your goal. And there's one thing you should always do to increase your score drastically and quickly. Get your existing credit card debt as low as you possibly can. A big chunk of your credit score, 30%, is based on your outstanding debt and your utilization rate. So lowering your credit card debt will always help boost your score quickly. I always tell people to keep their credit card balances below 30%. But the truth is that if you get your utilization rate to 0%, your score will be even higher. It's probably not practical to have a $0 balance most of the time, but you should try to get your balance as low as possible for the 30 days preceding your loan application or term renegotiation. There are 3 ways I want you to think about doing this. 1. If you're married, you can always leverage your spouse's credit. In another lesson, I explain that you and your spouse should always have separate credit cards. One of the benefits of this strategy is that you can leverage each other's credit strategically. For instance, let's say that you plan on buying a new car. You pull your credit score and learn that you have a 694 FICO score. It's not a terrible score, but if you got your score above 720, you'd save quite a bit of money on your car loan. So what can you do? Transfer all of your credit card debt into your spouse's name. Once again, this only works if your spouse has credit in his or her name only. If you are a joint user on all of your husband or wife's accounts, this strategy will not work for you. If your spouse does have credit in his or her name only, the process works like this. Once you transfer your debt into your spouse's name, your spouse's score will drop temporarily. But yours will improve as soon as your credit card companies report your new balance to the credit bureaus, which usually happens within 30 days. You can then walk into the car dealership with low personal debt and a higher credit score. Once you obtain the car and the best possible car loan terms, your spouse can then transfer the debt back to your name. At this point, your scores will revert. Your score will drop back down and your spouse's score will increase to its original position. It bears noting that you can use this strategy with anyone. A friend or a relative could also hold your debt temporarily. But friends and relatives might be unwilling to assume the risk, in which case you could always try giving them collateral. This brings me to my second strategy for paying down credit card debt and increasing your score quickly. 2. Borrow money from a friend or relative. I strongly caution against borrowing money from friends and family members unless you have several safeguards in place. At a minimum, you should have a plan that demonstrates how you will repay the debt, collateral that you can give to the friend or family member until the debt is repaid, and a bulletproof budget that proves you can repay your friend or family member. Without these 3 things, you could run the risk of failing to repay the debt and ruining your relationship in the process. But if you have run the numbers and you know 100% without a shadow of a doubt that you can repay the debt, you could consider asking your friend or family member for a loan. Asking friends and family members for money is always a little bit uncomfortable, particularly if you haven't been responsible in the past. So be sure to give your friend or family member a written plan that explains the interest you plan on paying, if any, as well as the monthly payments. Be prepared to discuss your finances because your friend or family member will want assurance that you can afford the payments. You should also demonstrate how the loan will allow you to save money. You might say something like this. Hey, I've called my bank and learned that if I increase my credit score to 720, I will save $225 a month on my house payment. I'll make monthly payments of $150 to you, which includes 4% interest. Or, for the first couple of years while I'm repaying my debt to you, I'll only be saving $75 a month. But in 3 years, I'll be saving $225 a month. That's about $80,000 over the course of the 30-year loan. In other words, show your friend or family member that you have put a lot of thought into this and that you have run the numbers and have a solid plan in place. Now, this brings me to my next point. Think long and hard about whether you will actually save money using this strategy. Not only do you want to make sure the interest you are paying your friend or family member, if any, is less than the interest you would pay your credit card companies, but you also want to be as sure as possible that your credit score will increase to its desired number. You cannot know exactly how much your credit score will increase, particularly if you have a ton of late payments, collections, and other derogatory info on your credit report. Borrowing the money, paying off your credit card debt, and having your score increase only a few points would be a bummer, to put it mildly. So you should study your credit score to determine whether you think this strategy will work. Let's say you have a 672 credit score. You haven't made a late payment in over 7 years. You have 4 credit cards and an installment loan on your credit report. Your credit cards are all 10 years old, and your installment loan, which you have always paid on time, will be paid off in a few months. You have a very clean credit report. The only thing wrong is that your credit cards have a 60% utilization rate. Paying them off would almost certainly cause your score to jump to at least 680, an important milestone for obtaining better interest rates. And it might even cause your score to jump to 720. Hitting either of these milestones would allow you to save money. In fact, a bank could tell you exactly how much money you would save by increasing your score to 680 or 720. And this information would help you run the numbers and make a decision accordingly. On the other hand, let's say that your credit score is 567. You have 8 charge cards, all with a bunch of late payments. You even have a few collection accounts. You have a brand new installment loan on which you have already made a late payment. Who knows what will happen if you pay your credit cards down? Your score will increase, but it might not increase much given all the other negative marks on your credit report. In other words, borrowing money from a friend or a family member would probably be too risky for your situation. But there's another strategy that is less risky. 3. Add your name as an authorized user to a family member's credit card. FICO has made an important change to its scoring systems, and some authorized user accounts are now included when computing a credit score. Let me explain. An authorized user is a person who has permission to use a credit card but is not contractually obligated to pay the bill. In this way, authorized user accounts are different from joint credit card accounts. If you're an authorized user, you could benefit from the credit card history, assuming you follow the rules of authorized users, which I'll explain momentarily. Let's say, for instance, that your mom lists you as an authorized user on her credit card. The credit card has a low balance and your mom always pays the bill on time. In other words, the credit card has a strong history and is in good standing. Guess what? Because you're listed as an authorized user, your credit score is going to benefit from the credit card history. Being added as an authorized user is a really fast way to get your score to jump quickly because you get to borrow the account holder's great history on the credit card. But like I said, only some authorized user accounts are reported to the credit bureaus. Some credit card companies don't report authorized user accounts as a matter of practice. And unless you're a family member of the account holder, your authorized user status will never be included as part of the formula that makes up your credit score. Also, some credit card companies will add a person as an authorized user, but not report this information to the credit bureaus. So, before adding your name as an authorized user, determine whether this will be reported to the credit bureaus. If the credit card company is asking for your social security number, this probably means that the information will be reported, but you should ask to make sure that it will be. If the credit card company doesn't ask for your social security number, the authorized user account will not be reported to the bureaus, and it won't help your score. If this is a strategy you plan on applying, be sure to refer to the PDF for additional resources about authorized user accounts. This is a particularly strong strategy if you have no credit. A couple other points about authorized users. 1. Because this is a great credit building strategy for people with no credit, I always tell parents to add their teenagers as authorized users to accounts in good standing. This allows a teenager who otherwise has no credit and would therefore have a bad credit score to leave the nest with a strong credit score. 2. Many people say that their family member won't add them as authorized users because they don't trust you with a credit card. The attached PDF references an article that explains how to safeguard both your credit score and the account holder's credit score so that neither of you have to worry about an authorized user account hurting the other party's credit score. In closing, you must always remember that a high credit score is a powerful tool that can help you live an easier life. It is not a reflection of who you are as a person, but raising your credit score is the single best thing you can do to protect your cash, your family, and your financial future. Therefore, be sure to take each lesson seriously, complete every task, and follow the plan exactly as outlined. In doing so, you will take full control of your financial destiny.